All right, we're live. What's up, party people? My name is Sunny Ray. This is the Sunny Ray Show. Today I'm with Tom Milar. How you doing, Tom?
I'm good, actually, Sam. Thank you so much for having me.
Yeah, thank you for being here. I like to start it off with, just a quick paragraph or so on maybe Ekvista, what you're building, and then we'll kind of get back to that topic later on in the
Yes.
interview. But I like to start there. Yeah.
Yeah, perfect. Yeah, let's do it. Um, so we started. I would say even though before anybody else started, I built multiple companies, mostly in Hong Kong. That's actually where I started. I built mostly in a space, telecommunication and compliance. Um, so we were building a lot of, starting a lot of companies for people moving to Asia. It was a big thing back in 2010. And, after you incorporate a company, the first thing, what do you need? It's, a bank account and to distribute equity between the founders and employees, right? And it was big 2010. So we launched a company called Startup R in Hong Kong. We became one of the largest company secretary in the US. You might know it as a registered agent. So you need a registered agent to usually receive subpoenas from the court. That's one of the main responsibilities for registered agent, even though for company secretary. So we became the largest one in Hong Kong, and we were managing equities for founders and employees already back then, right? But we didn't really see it as a business. Moving forward, I moved to United States 2017. They acquired one of the largest registered agent in Nevada, Las Vegas. I moved in. We took the company. Again, we were heavy on equity management. It was 2017, and I saw a big opportunity to launch the entity. So it was my eighth company back then. And we launched a Crystal, so equity management, admin, and I would say most recently, the past couple of years, we had a huge bet on valuation, and we became one of the largest equity valuation platform on the market. So that's a short story how we started
Super
and what
interesting. Yeah,
preceded
no,
us.
as a serial entrepreneur, parallel entrepreneur, whatever you want to call me, I definitely, equity is what it's all about, right? So at the end of the
Yes,
day,
yes,
there seems
yes.
to be a tremendous amount of confusion and just like misunderstanding about like who owns what and who has, rights and preferential and it's like a whole universe that I think most people, even people like myself who've been doing entrepreneurship for such a long time, I think struggle to, kind of like grasp all the different elements and the levers. So cool.
Yeah,
Hey,
you're absolutely right. Yes, it is
before we
completely.
segue into like the main part of the interview and stuff, I'm just curious. Like, I gotta ask, I think a lot of people have used Carta, right? So I've used
Mhm,
Carta
mhm.
myself at companies. So can you tell me maybe a little bit about how your system is different, better, unique? Is it more like a geography play type of thing, or
Yes,
like what
yes, yes.
where? Yeah,
Like there's the technical part, and then there's the convenience part. For us, we are truly a software company, meaning you don't need us to use our platform. We don't have an annoying sales team where people just after onboarding call you immediately and try to sell you services or products. You don't need, so you can go online at Krista.com and just issue stocks to your founders, investors and employees, build different equity plans, run waterfall analysis. So you don't practically need us to use our software. you know so that's the biggest difference. Then definitely prices. We haven't we hadn't raised that much money as kind of big win for them. But at the end of the day, they had to they had to or they have to keep raising the fees. We are 80% less expensive than them, which is a lot. Like paying 25,000 versus $5,000. That's big difference, right? But if we can little bit actually move and focus more, what actually is doing for the market. I was always I never actually paid attention to competition. Like when you're building a product and you spend a lot of time on actually understanding the market. That's actually better than paying attention to competition. We currently we are heavily focused on real time company valuation. So you can see the stock price of your stocks in real time, and that's our biggest bet on that product, because if you issue stocks, the stock price usually relies on outdated PDF. The PDF can be either for a 9-year valuation where the PDF actually dictates the stock price of the common stocks, and then you have preferred stocks, which is usually based on the discussion between the founder and investors. So you have a multiple prices. Let's not forget about secondary market, which is also a big mess. Bids and asks are usually between buyers and sellers. We have platforms, they try to provide the stock price, which is usually quite wrong, because obviously they don't have data and they have always intention to sell the stock, so they do anything with the price just to satisfy both parties, right? But that goes against the client's wish, the company wish, right? Like they always try to sell the stock price or the stocks of the company for what they think it's worth, rather than what the others are trying to sell it for. I can give you an example. We have a client, unicorn company, $1 billion in valuation, and their stocks were traded on the secondary market 30% less than the founder was actually fundraising in his next round. Right, the secondary market is always a little bit awkward, either behind or they don't understand what actually is happening within the company, which is quite obvious, because they don't have the financials, the secondary traders, right? So that's why actually we are quite heavy on developing the infrastructure. So my dream, it's practically to have one price, which will help the whole market understand what the company is worth. That's the best case scenario. So you will have you have access. I can actually show you how it looks like. So you will have access to a single price as a shareholder, and you can rely on this pricing.
Sorry, we can do a screen share or something, Tom? Or
Yes.
Sure. Like, how do you achieve that without like an order book or a public order book or something?
Can you see my screen?
Mm-hmm.
So this is exactly how it's supposed to look like. So we see a privately owned company. The revenue, it's whatever the revenue is, but we are able to model the stock price of the company in real time. So you can easily understand what's your exit like price. The shareholders understand what technically they can sell on the secondary market. And to answer your question, so we started as 4-9 evaluation provider. So we do roughly $5 to $8 billion in clients' assets evaluation monthly. So we are one of the largest on the market, and because of that, we were able to build algorithm and formulas so precisely, so we can evaluate any asset. So we have a different methodologies where we can come in, look at the company, and even though without data, we can tell what the company is worth. Obviously, it's always better to get financials, profit loss balance sheet, cap table, definitely, and forecast, so the valuation can be more precise. But yeah, that's how we differentiate ourselves. So we started as a equity, then we moved on the equity admin, then we moved on the valuation for 9A fair market value, different type of valuations. We saw this opportunity, we built real-time valuation, and then we're like, you know what, like let's start something cool. So we are working on we are working on a marketplace where you can sell and buy stocks. So that's actually how we see us.
Hey, again, I normally have like a series of questions that I kind of go through, and I'll get to those. But I'm just so curious about the stuff. Did you hear about the Anthropic situation this week?
Yes.
Any thoughts on that?
You know what? As entrepreneur, if you don't receive cease and desist letter, right? You don't do business. You need like, at the end of the day, all of us receive cease and desist letter, right? That's quite normal. And we had this discussion about this actually with our board yesterday, right? And I don't think that this is correct. Like I think like all these companies, Hive and what was the other one? Hive, Equities, and Forge Global. I don't think that that the Anthropic has a right to dictate to shareholders what to do. It's quite normal. What do you think?
Well, I guess I'm still trying to figure out what you think. So I guess, are you saying that what happened there, like Hive is and the parties, I guess selling their stock in the second market are wrong, or the company is in the wrong, or is it like neither? It's kind of gray type of thing.
Yeah, because Anthropic assertion about the shares they hold or are selling is completely false. All these allegations, I don't think they have any rights to dictate to the secondary or the shareholders what to do with the stocks. I don't
Right.
have any.
Right. Yeah.
I don't
Yeah.
have
I agree.
any. I don't have any legal claim right against that. But the secondary market has been here forever, and it's really between me and you what we agree on whether
Got it.
I'm gonna use my stocks to back a loan, right? It's similar implication, right?
Yeah. Okay. Makes
So
sense.
it is untrue statement, and those companies should take legal action, and fighting back, to
Yeah.
protect the free market, right? So
Right. I got you. Cool. So,
so
so
I'm
Tom,
I'm, I'm so I'm on the shareholders. So just to make it more
got
clear,
it.
I'm on
Got
the
it. Got it. Got it. Got it.
shareholder
Yeah, that's what I thought.
shareholder
But I was
side,
like,
on the
okay,
shareholder
yeah,
side. You know,
yeah, me too. It
um,
seems a bit weird that they're telling shareholders what they can and can't do, but it's just I don't know. Anthropic is such a funny company, right? Like they're like supposedly the most like safe one. They have so many
are
concerns around
they?
safety, and then they leak their
Are
code, right?
they?
Or not leak, but they dropped their code. Was the last month the Claude code got dropped on the internet? So it's just like, who knows? Who knows? I mean,
But you know what? This could be also amazing marketing, right? Like we don't really know how all these statements are really right or true, or was the intention, right?
well, I mean, with
It's
OpenAI, they had the big, obviously, kerfuffle, whatever the problem with Sam and the board, right? That was obviously very public. And then I heard just yesterday about this story of how Grok, because Elon is trying to lean it towards the right, it ended up into like some Hitler land somehow, and it started becoming super weird. So it's like it's funny. It's funny what's going on,
and
but
we
it's
live in
also
interesting time, right?
scary.
Like also
Uh,
the problem is that also live in interesting time, right? Like with all these AI videos and
and then
fake
Google had yeah the
fake
fake.
fake fake profiles, having millions of followers. You don't really know what's intentional, what's not intentional. It's very interesting to see what because like 20 years ago we would have a media, right, like the traditional media, um, feeding us what we should think or what we should consume and believe, and the story would be practically based on journalism, the traditional journalism, right? But now anybody can be a journalist with, let's say, 100,000 followers, either on LinkedIn or Twitter, right? And spread the claims. So yeah, I know it's.
Interesting times. Anyway, so this interview took me a while to kind of warm up to the act. By the way, I haven't even started the actual interview just because I was so I wanted to ask all these questions, and I think it is a very important topic, right, that you're working on. But take me back, maybe a little bit too far back. But you grew up in Czech Republic, right? So what did the early
Yes.
years look like, and what did your family teach you about money and work?
You know what? It's very interesting. I was born in 1984, and the revolution happened in 1980, 89. So I don't really remember what was it like in a communist time, right? It was just 5, 6 years old. But uh, I was lucky to be a witness of seeing my father working really hard. So he had advertising in a company, um, and he would focus on super high tech, uh, a super high tech industry where he would buy, um, purchase large machines like printers and different kind of different kind of printers and computers. And I was 6, 7 years old, like watching my father building his little company. He would leave very very early, come home very late, and I think that's actually what actually shaped me myself to see my father building a company. You know, so we would understand back then how hard it is to actually building something and put the time into it. So so my childhood would be seeing my father working, well, not seeing him much, and I was playing hockey. That's actually what we had this discussion before we started this um, podcast. So it was seeing my father building his company, and me playing hockey. So that's how it was. I was
So,
from small town, so
You started building your first venture in 2006, right? Before, I guess, most of your friends
Yes.
finished school. What pulled you into business so early?
You know what? It's quite interesting. I had a few friends, and they were very successful in their 20s, early 20s. I was like, hey, you know what? It's kind of annoying. I'm stuck at school, right? Like studying. And I didn't like the school, right? I never understood why I didn't like a school until now, right? Um, because the school was not really, it's not really pragmatic, you know. So um, I had a problem to understand why we study um, things which happened like 400 years ago, 500 years ago, and like very detailed. You know, we would like almost like go through history week by week. You know, in the 15th century, almost like we would understand. You know, what that emperor or a king would eat for breakfast, and you know what was his daily routine, right? Like understand the history is very important, right? Or the school. But then you are 18, 19, and you don't even know how the legal agreement looks like, right? Or how to transfer money, or that there is a ACH or wire transfer. What's the difference? Like very practical thing, or you know, completely off-topic school marriage. You know, like raising a kids. Um, so I had a problem, you know, to understand why we studying all these subjects. It didn't make sense. I saw my friends building the companies, and then all of a sudden, you know, I was like, hey, you know what? Let's do something. So I started a company. It was in Mexico. The company actually still operates and makes money. So we would have uh, small export import company in Europe, and it would import mostly dehydrated nopal. You know what nopal is? Cactus nopal. It has
No.
it's a if you look at a Mexican flag, you can
Okay.
see the leaf. You can see the leaf. So we would take practically the national symbol of Mexico and dehydrate it and build multiple products from it, like some pharmaceutical supplements, um, bread, yogurt, a beer. You would actually brew a beer, nopal beer. So if you Google nopal beer, that's my invention. That's how I started actually my first very first company. Um, yeah.
And then before Hong Kong, you spent time in Beijing as well, right? So I guess
Beijing, yes.
so. What did living in China teach you that no business school could?
You know what? I had a. You asked about business school, but you know what's interesting. We had a teacher in my sixth grade, and he didn't ask us to. He was the first very progressive teacher, extremely progressive, unbelievable. And he would ask us during the test to use a map, so we wouldn't have to memorize things. He was like, "Hey guys, you know what? There's a thing called a book atlas. You can actually find all all the information in the atlas, right? Like you can go to Indonesia, you can understand, you can understand where the Great Wall is. Beijing's Yangtze the Yellow River, right? Um, the Forbidden City. So he would teach us a lot of things, and then I was in China, right? Like all of a sudden, all these memories came back, and 2010, how it looked like a fairy tale, like Beijing in 2010 was amazing, especially for foreigners. Like they would give you amazing job, amazing salaries, and China was practically free. Like really you could do whatever you want. But back then I really I really liked Beijing. The Beijing was actually under construction. All the hutongs. You know what the hutong is? It's a small it's a village, like villages, like little buildings, like like in a fairy tale, like little buildings where people would live, and what what how the life would look like, like 200 years ago, 100 years ago, hasn't changed. And what Beijing was doing, actually, were taking all this historical part of Beijing down and building the new Beijing as we know now. So I was there back then, so I remember the heavy pollution. And, all these districts are changing so fast and rapidly, and I was back then. Where it was amazing experience. Amazing experience.
Interesting. So, so you had a profitable company formation business, right? So, what did you keep
Mhm.
seeing in your clients that you could not unsee?
When they were starting a company, I think incorporating a company, it's a 2 hours job. 2 hours, and sometimes it would take them weeks or months to set up the company. They would come back, and I had a hard time to understand why these repeatable things is happening. If I answer your question
Mm.
correctly, so it was hard to unseen, and I was always so nervous about it. It was like, they were my fellow founders, right? It was just irritating to see that people got stuck on incorporating a company, and it should take 2 hours, not 2 months. So it was hard to understand why this is happening, because that's a pattern for most of the entrepreneurs, that they just overthink things. I actually had a call with a really good friend of mine just before our podcast, and he was asking me a question. Like, "Hey, man, like, there's always a risk involved. You just can't really, So I think it's a risk."
Mm. So, walk me through the moment you realized founders were still printing share certificates on paper in 2018. What did that tell you?
Uh, you know what? I think they didn't even understand that it doesn't have to happen. I don't think they really understand that all you need to do is just uncertificated stock. It's a term, and it's just entry, in one line, spreadsheet or Equista cap table, right? So we have a three different type of ownerships from admin point of view. One is the certificate, right? Um, that's a certificate where you just practically print it, right? It's a document. Then you have a digital certificate, and then you have an uncertified stock, which has no certificate. So yeah, I was kind of shocked, even though, but people are still doing the same mistake even though now. So I don't believe that time it's much different. So for some reason, even though lawyers are pushing founders to still have a at least digital copy of the certificate, which is not necessary.
Interesting. So, Equista launched a small MVP, right, and then grew essentially into a full equity platform. What was the first piece of feedback that changed the product forever?
You know what? I think the onboarding. How you onboard the clients. The feedback was, that, and that's actually what I mentioned earlier when you asked me a question. What's the difference between us and our competitors? we made the onboarding so simple. People can go and build and issue stocks in 10 minutes. Yeah, that's probably the biggest client feedback we ever had, and I think that was amazing. To just simplify the onboarding.
And then Checkly came 4 years later. What did you see in 2022 that made you double down on banking for startups?
You know what? I was back then. It was funny moment, right? Like we at least I was taking off, and we had from my previous business startup, we had so many talented people, and we just knew how to build a neobank. Right? We just knew it. Right? I was like, hey, you know what? I think it's actually time to go. Let's be bold. Let's just like do some big things. So we started a new bank, and the synergy with Equista is amazing. So now we are building a marketplace. We're starting a controlled tender offer. Companies can help employees to liquidate their positions, or the ownership, right? So we're going to start bringing liquidity, and that's where we see Checkly, the neobank, as a very important player, where all shareholders will have account with us, as well as the two companies. So that was the idea. So the first idea was just to help get accounts for entrepreneurs, but that didn't really work out. So now the thesis is that all Equista clients will have Checkly account.
So you acquired Ink Paradise instead of building from scratch. What did that deal teach you about capital allocation as a founder?
Capital allocation is just return on investment. We acquired a company which was profitable, extremely profitable, and I understood the business. I understood the cash flow from the day one. So I think when you acquire a company, or you acquire large asset, the first thing you need to understand is that how you're gonna get money out of it. Either in cash flow or position in the market. But the easy measurement, it's under how you can actually quantify it. It's through profit. So profit.
And you've done this whole thing without a single dollar of venture capital. Was that a
Yes.
principle, a constraint, or a strategy?
Funny, what's quite funny? Like every time somebody asks me this question, it makes me like either happy or sad. Like I was never I never had a patient to raise money, right? I'm not type of guy with the hype companies, right? Like, and I see the mistake all over the place. People just basically raise incredible large rounds, right? And they just spend so much time on fundraising. It's just unbelievable. Some founders even though go from one round to another, you know. And the point here is, hey, what about your clients? How do you understand the industry, right? So the typical founders where they raise large rounds are, and this is what actually I've seen, where they leave the vision, because they have a team who can help them to build the vision, right? So they really look smart, and raise crazy amount of money. It's probably the right way to do it if you want to get to 2, 3, 400, $500 million of revenue, right? But the chance you're gonna get there is very small, extremely small. So you have that kind of founders, and then you have a founders who spend time with the team and on the product. It takes longer, right? But you don't really gamble with your time and others people money. So my situation was always yes, go out, raise money, but you as a founder, you should be heavily involved in a product. So the combination of a fundraiser like type founder and the product founder is the best. I'm the product so far only, right? So I was always heavily focused on a product, and that's the reason why we were successful without venture funding. Obviously, I'm jealous of those founders who are able to raise 30, 40, $50 million. But yeah, that was not the case for us. Luckily, we were able to get where we are, and now the story is crystal clear. So again, product heavy on product. That's the reason.
I like that. Vista now manages over $270 billion, right, in assets across something like
We
23,000
we,
companies. Is
we,
that
we
right?
call it administer. We don't have the management. We don't have the asset under management. Typically, the AUM it's for private equity or VC or
Good point.
banks.
Good point. Right.
Yeah. So, but yes, that's
But
right.
can
So
can you make that real for someone hearing the number
yes,
for the
yes,
first
you're
time?
absolutely right. You're absolutely right. So what we do, we help founders to understand the company value, um, and we have a platform where we calculate the company valuations, and the platform constantly runs these numbers, and the number is $300 billion. So we make sure that that number is accurate, moves with the market. We make sure that companies, clients provide us with the most recent financials, so we can reflect the success to the market price. And yeah, we built one of the largest valuation engine on the market, and we are able to precisely say what any company is worth
In any country?
in any country. Yes, any country. Our clients are mostly US based. I would say 95%, mostly based in the United States. And funny enough, um, when you are, let's say, in China or India or UK or Germany, at the end of the day, you want to go to United States, because the market is so free, and the the, um, the money flows so freely and quick. It's the ultimate goal to move to United States. So any company, yes, US market, it's very hot, right, for any startup. So the multiples are higher. We understand that very well. For instance, in Europe, the multiples are lower because the market is fragmented, um, and the stock prices are lower because of that. And we understand all these principles, so we can help to build the valuation for any type of company anywhere in the world.
You process something like $5 billion a month in AI
Yes,
driven real time valuation. So where does the AI actually do the work, and where do humans kind of still own the call?
it's basic combination of the formulas. It's based on type of industry, margins, where the business is, what are the market comparables, and then formulas. The formulas again, the type of information you receive from the clients. So that's all calculated by AI, picking up the right formula, combination, data scraping, benchmarking, because we have a huge data set, finding the right partner for external data and market comparables. So there's a lot of involvement, and there's humans oversee all these processes. So we always check, make sure that everything is proper, and it's always delivered by valuation analysts. So the CEO, CFO, and founders can always come back and have any questions, dispute valuation, or big more clarity on certain processes or number. So we can go back and fix it. So we run on reasoning. So when we have a belief and good reason to adjust the price, we can do it. But it's always based on valuation products, because we are.
Tom, do you have a hard stop in 2 minutes, or can we go over a little bit?
Yeah, we can go a little bit. Yeah,
we can go over. Okay, cool.
Yeah,
Sorry.
yeah, sure.
Hey, so I was going to say, so Carta dominated this category for years, right? So what can a bootstrapped operator out of San Francisco do that a unicorn cannot?
Not waste money. Not to waste money, and just focus. Just to focus what really makes sense. What really makes sense in the product. So it's a product, practically.
Just to push back a little bit, right? So the argument that I was sold was network effects, right? These types of things, software, etc. There's this winner take all land grab type of mentality, and there's only going to be essentially one, maybe two winners. So the kind of the fundamental reason for fundraising and moving super quick and aggressively is that, once you become like Uber, good luck trying to dethrone, someone like that, right? So where does that argument fall short?
I can see the analogy for Uber. It really depends what do you really want to achieve, right? Like, do you really want to be if you want to have a big company, get a fame, I think yes, that's right. Fundraising, go heavy, or effect, all these fancy words. Yes, that makes sense. Or you can build a profitable company, common sense company, and just build second player, and just try to understand the market so well, so you can build Uber for fast seafood delivery. Once you learn the trick, right? So you can move, let's say, frozen, not frozen, the fresh fish from one continent to the other, to the restaurants, right? So and you can do it very efficiently once you understand the business. So you can keep, as a founder, 40-60% of the company, because like all these companies, obviously, raise a lot of money, but at the end of the day, the question is, as a founder, what's left, right? There's not many as equity for you, right? Because there's not many Ubers, Airbnbs. There's, let's say, 100 companies that successful in past 20 years, right? So I wouldn't really focus on comparing success with the super lucky super fortunate companies, because to build Uber, everything must go right from the day one. You know, it's
Yeah.
I know there are critical. I know there are critical points, right, in the business, but at the end of the day, Uber wouldn't be Uber if everything wouldn't go right, from the beginning to the end.
You set $1 trillion in assets under administration as the kind of the floor, right? And then openly mentioned $10 trillion. So what has to be true for that to land?
So it's is the graph I was showing you early. So we built product called Equista Real Time Company Valuation, and we value. So we grabbed or we took 12,000 companies, most recently funded, a few unicorns, and we built the largest valuation engine on the market. So we constantly calculate the stock price of 12,000 companies in real time. And a few team members were very skeptical that we can do it and that fast. And yes, we were able to build that engine, and we're just at this stage we're distributing the stock price to those companies.
And I assume this is a function of buyers and sellers, right? Like actual transactions occurring or something, like, or are you using other
No,
metric?
no, no, no.
Oh,
Usually market comparables. So we and benchmarking. So we understand. So we have a huge data set, right?
what do
And we have,
you don't charge for this? You just kind of do
no,
it?
no, 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 because we want to become a pricing infrastructure, right, for the private market. So I know, it's crazy.
That's super
Yes,
cool.
yes.
Oh, we got to talk. Okay, so couple other questions. So Checkly is now bolted on as the banking layer, right? Where does the
Yes.
combined kind of Ekvista plus Checkly stack go in the next 24 months?
Um, so we will build marketplace for secondaries, and each user will have a Checkly account, so they can move stocks and get paid for the stocks.
Interesting. So AI is reshaping how startups are built and capitalized, right? So how does that change cap tables, valuations, and ownership over the next 5 years?
I think it's just mostly the precision and the speed, how quickly you can issue stocks, how quickly you can read documents, and how precisely you can calculate the stock price. So that's why I see the future.
And last question, if a 22-year-old version of you walked into your, San Francisco office today and asked what to build, what would you tell them?
Um, yeah, good question. So you know what, I would start with something very simple, and something what really makes money immediately. I'm a big advocate of revenue over fundraising, and then fundraise, because when you can prove that something makes money, um, you can explain to investors that, hey, I'm gonna return money back to you with a capital gain, or with the profit. So anything where you can see that somebody's gonna, or is willing to pay for it. I would start with it. It can be anything. Definitely SaaS. Definitely software. And there's multiple ways how to do it. Right?
Cool. Well, Tom, what an awesome interview. I really enjoyed it. I see we have a whole bunch of people also listening to us live. So thank you all for tuning in. Tom, just to, before we leave, where do people, is it ecvista.com? What's the website? Where do
Yes.
you post? Are you a LinkedIn guy, or do you have your own blog or something?
You can actually write me directly, but obviously LinkedIn, and I respond to all comments, and my email tom at equista.com. I can help. If you need a 490 evaluation, you need stock issuance, or even though if you need real-time valuation of your company. So you can see the stock price on your phone. So we have also app, so you can see the stock price of your privately owned company on the app.
That's
So
wild. I've
before we go,
never.
actually, I can show you how it looks like. I can pick any company, and you will be able to see the stock price in real time. So yeah, this is how it looks like. So happy to help with that too.
Yeah, I got so many questions I want to ask after this live stream. So I'm gonna bring this one to a close. This is it's been a lot of fun, super important yet overlooked, it feels like.
Yes.
And yeah, you drop some, just golden, I think, nuggets for people all throughout, right? Just don't prioritize fundraising, focus on revenue, focus on customers, focus on product, focus on value. All that hit. So thank you, Tom, once again. And yeah, thank you all for tuning in. Until next time. And
Thank you,
Tom,
Sunny.
just hang out for a minute. Yeah, thank you for coming on.